All right. Well, thank you everybody for joining us today. We got Broadpoint Properties and the Zavala team in the house again. So thank you, Javier, Jesse, Eder, Melissa, for allowing us to partner up with you guys and, share with people, with our clients out there in our communities, what options are available. Although we're going through this COVID-19 pandemic, and business doesn't have to stop. We want to bring all of our past clients, current clients, communities, some valuable information. Everybody can be, up to date with what's going on, and know that you guys still have great options out there. I think we're in an amazing environment if you're looking from an opportunity standpoint, to where if you're financially stable out there, you're still employed, you haven't been laid off, you haven't been furloughed, that there's great opportunities, because literally about 60 to 70% of your competitors out there from offer standpoint, if you're a buyer, are not buying a home right now because they got laid off or furloughed. So, take advantage of that. Rates are still down. We're going to cover some of that options available to you guys here in the presentation. But if you're stable, you're still working, you're still motivated to buy a home, please give us a call. We're here to give you some valuable free information today. So, once again, thank you guys for allowing me and my team guys to partner up with you guys and bring more information to everybody out in our community. Jesse, thank you, man.
Sounds good. No, thank you, Alfonso, for joining us today. We have Javier Zavala on today, Melissa Zavala, our broker and fearless leader through all of this. and we have Eder Contreras also joining us. So today we're going to focus on what options are available if we can't make our mortgage payment. But before that, we're going to do a little bit of market analysis and see what opportunities are actually out there for potential buyers, whether you're looking to downsize, or maybe you need to upsize, maybe the family got bigger. We hear that the birth rate might go up during this time also, so maybe you might need that bigger house. So it's a great time to start planning for those things. So market opportunities. Currently here in San Diego County, we have 471 single family residences under 550,000. So why did we pick 550,000? Well, that's the cutoff for high balance. So anything above 550 is considered high balance, and Alfonso can explain that a little bit more, how it's split up right there on that marker.
Right, no, absolutely. I mean, and also it's because that's where we're seeing the majority of our market buying homes, right, Jesse? I mean, 550 right. And under is the majority of move-up buyers or first-time home buyers looking to buy. Most people want 3 to 4 bedrooms, so that's the price point where you're able to find something for our clientele and our our community. So yeah, anytime you finance technically anything over $510,000 loan amount, not sales price, but loan amount, it is going to be considered a high balance, right? So anything under 510, you're probably going to see the best rates, the best payments, the best opportunities as far as the lending world, because of what we're going through with COVID-19. But there's still a ton of options if you're buying anywhere from $511,000 to up to $701,000. There's still great opportunity. But for the purpose of this presentation, we want to focus on the average sales price that we're seeing that people are buying out there. And this is great information, Jesse. So right. You're saying there's 471 single family residents in the county of San Diego that are listed at 550 or less. Is that right?
Yeah, currently as of 10 in the morning today, 471 properties. So there's definitely opportunities out there. 512 condos under 400,000, and that's also townhomes and twin homes. A twin home is what a lot of people consider like a duplex, but in the real estate world, the duplex means that you own both units. So this, you only own half of the building. So in South Riverside, where I do a little bit of business also, we have 63 properties under the 442, and 8 condos and townhomes, twin homes under 350 right now. So definitely a smaller market in Riverside County for the condos and townhomes, but definitely quite a few properties. And most of these properties in South Riverside County, and these are the cities of Temecula, Murrieta, Wildomar, and Menifee. and Winchester also. So there's definitely really good opportunities out there. I just closed one deal there, 435,000, 3-bedroom, 1,400 square feet on almost a quarter-acre lot. So huge property, beautiful, great for, that 5-people family. So all of this information is from our MLS servicer, CRMLS. If you have any questions on all of these numbers, please feel free to send us your questions, or we can definitely explain that.
Jesse, I'm sorry, what was the price point of the one you just closed?
435.
Okay.
Yeah, 435,000. So great price. His payment, my client's payment was right where they wanted to be. Fortunately, they are still employed right now, so they have no issues with that. Talking about opportunities, and I kind of went into what is a duplex and what's a twin home. The next slide, we have this one opportunity right now. This is a duplex, so you own both units. Both of them are 2-bedroom, 1-bath. It's right there in Escondido with some beautiful views of the whole valley. The units have been remodeled, completely ready to go. This one right now, we have it listed at $590,000, and this one is bringing in, if I remember correctly, $3,700 in rental income. Is that correct, Javier?
It's approximately, yeah, that's the rent.
3,700. So yeah, Alfonso, do you have our pricing sheet? Here it is.
Yeah.
So here's our pricing sheet, and Alfonso can go over a little bit of these numbers.
Absolutely. So just like Jesse was saying, I mean, there's great opportunities out there still. Anybody paying, rent, you're essentially paying a mortgage. You're just paying your landlord's mortgage, not yours. So here's an amazing opportunity in Escondido where you get to live in one. You can rent the other side out. This illustration will give you 3 different loan options that this property does qualify for. First option is an FHA loan. The minimum down payment required is $20,650. Interest rate is 3.625 right now. Principal and interest payment, you're looking at $2641. Once you're at your taxes of $572, insurance for the home, $73 a month, mortgage insurance of $403, you're coming with a total monthly payment of $36.99. Let's round it off for even numbers. So right now, you guys can live in one, rent the other. The other unit, it's being rented right now, right, Javier, for $1,700?
$1,700, yeah, correct.
So for $1,700, there's a tenant already in there for you. So we're going to take that off the payment. So you're literally making a mortgage payment of $1,999. Paying north of that of rent, stop paying rent. This is a great opportunity. If you don't want to manage the second unit, don't you worry about that. We have Melissa here. That's what she does. She can help you manage that unit. They do property management. So, we'll help you with that as well. Second option is a VA home loan. This is for all active duty military or personnel that's been in the military that was honorably discharged, that has a certificate of eligibility. You could buy this property with no money out of pocket for a down payment. Interest rate's 3.625. Sorry for the typo there. It's 3.625. Principal interest payment is $27.52. Taxes are the same, $579. Insurance is the same, but if you notice in this scenario, there is no mortgage insurance. That is the bonus. That is the best thing about VA. You do not pay a monthly mortgage insurance. Okay, so that gives you a monthly payment of $34.06 total, everything. And if you take away the $1,700, you're literally owning this unit for only $1,706 out of your pocket to cover the mortgage. Okay. Option number 3 is a conventional loan. It's more of a traditional financing. You do have to put 15% down in this option. Okay. Once you buy more than one unit as an owner occupied, you need to put 15% down. That's $8,500. Interest rate's about 3.875. Your principal interest payment there is $23.58. Your taxes stay the same, $579. Insurance is the same, $73. Mortgage insurance about $167 once again, because you're only putting 15 down and you're financing more than 80%. So therefore, there's going to be mortgage insurance. There are options where you can buy out the mortgage insurance and not pay it, but you have to pay an upfront premium. But let's say you finance it, that it's a mortgage payment of $3,179, and if you take away, once again, the $1,700 that somebody's currently paying right now, you're left with a difference of $1,479 in order to pay that mortgage payment. So great opportunity. This is, I can't say anything better. I mean, it's an amazing opportunity because you can own both units, you live in one, rent the other, and you're paying less than probably what you're paying in rent. So give us a call if you are interested in this property. We'll be more happy to pre-approve you over the phone. We can do a virtual meeting to get you qualified. And if once you qualify, the team will be in charge of the unit. So that's what I got in regards to the payment, Jesse.
Yeah, so this is also like we were saying, perfect opportunity, for multi-generational families. The in-laws want to live with you, but you kind of don't want to have them there with you. But you got next door, so they have their own door. You have them there with you, but they're separate. Like we say in Spanish, juntos pero no revueltos, right?
That's
so
right.
It's a great opportunity for that. It's a great opportunity for income, or to turn it into an income property in the future and start your real estate portfolio. So, like I said, just because we're in this situation right now, it doesn't mean it's going to be here forever. The benefit of this is that you own it and someone else is helping you pay the mortgage, just like you're helping your landlord pay the mortgage. So the benefit being is that right here, because of the situation that we're in, if you were already a homeowner, there's certain options that you have. Like right now, there is no rental forgiveness. There is nothing like that unless you have an agreement with your landlord. And right now, there are limited cases like that, but for the most part, you still have to pay your rent, whether it's when it's due on the 1st, or in the future in payments, installments, whatever. You're gonna have to pay that rent, or else it's gonna affect you negatively. But right now, for people that own their property, there are certain programs the federal government has rolled out to help out during this situation. And Javier is gonna talk a little bit about that, the different things that we can help you with so that you don't have to be so stressed out because of that payment.
One of the things that over the last maybe probably the last 20 years, we've seen a lot of first-time home buyers, instead of looking at houses, they've found that they transition better into a duplex situation because they know that, a very significant percentage of the payment is offset by the rent. And we've younger people as first-time home buyers, or just people that have been renters for many years. And I think even Javier has one past client who started out doing something like this, and I think she owns like 9 properties now, or nine doors, I'm gonna say. So maybe 3 or 4 properties, but multi-units, because she's found over time, she's been able to create a portfolio just by starting in a duplex situation herself. So there's definitely a lot of positive benefits, particularly since most people are paying $1,700 in rent already themselves. So might as well pay $1,700 and own a piece of Southern California, I guess, right?
Yeah,
definitely.
Yeah.
I want to also add it to the military people, and they can buy this property in case they relocated, they can rent it and they can continue and will be managed, and they will have a income property on that too. So it's a great opportunity for people, and this is a perfect example. So
and for military too, Javier, that you may be questioning, well, what if I get relocated, right, or transferred?
Right.
That effective January of 2020, the VA home loan has no more limit. So let's say you buy this property and you get relocated in a year or two, you can turn your current unit into a rental as well. That will be paid itself. It's probably going to generate some cash flow. And then wherever you get transferred to, you can do another VA home loan. So
you can have 2 VA loans at the same time now?
Absolutely. Yes, you can. Yeah.
Wow.
Yeah.
Okay, I didn't know.
Especially when you're being relocated, with orders. So, the VA allows that. The cool part about it is that before there was a limit, but now there's no limit. So they can literally have this condo or duplex, and then they get transferred to Washington. They could buy another duplex over there, or could buy another single family home, whatever they can, whatever they want. So by the time they get out of the military, 10, 20 years later, if they're in there that long and they got relocated, they can have, like you said, like Javier's client, they can have 4, 5, 6, 7, 8 doors, right?
Exactly. So there's an opportunity for the military.
Yes.
So let's go back to our presentation, and I wanted to start to, if you have a problem and you cannot pay your mortgage, the first thing we recommend is call the lender. The lender has a lot of opportunity and options to help you. That would be the person, like right now is the forbearance. The forbearance is one of the package they offer right now for people. The business, they close for the buyers. And so, but make sure you need to understand, the forbearance is not a forgiveness, so they don't going to forget that payment. The forbearance package or forbearance situation is just what we call is a delay of the payments. Okay, we talked last week about this, and I wanted people to understand properly. And also you need to understand, you need to make sure, check you sign one of those programs, the forbearance, and agree with all the conditions. Make sure you need to check your credit, make sure by accident or error can be a negative activity in you credit, so you can fix it so you don't wait until the end. So that's the forbearance. We already talked last week. And you have any more questions about forbearance, free to call us and will be the opportunity. So in case we back again saying what happened if we don't pay the mortgage, the next step after the forbearance, the first step is call your lender, see what they offer. Do your forbearance will be the second step. If the forbearance cannot help you in the moment, it's coming. The third one would be the modification of terms. The modification on terms is you back to the lender, and what you're going to do, you're going to renegotiate your note, which is all the conditions about the loan. Let me give you an example so everybody can understand. So you have a property is, your loan is $500,000, and you have 30 years fixed with interest there 4 or 5%, and then right now you cannot afford to make that payment, so you will go back to the lender and you try to do a modification. The terms can be a modification that's short-term or long-term, and that's the way you negotiate with your lender, and they can negotiate. Let's say it was going to be a short-term, you will negotiate your interest or your payment for short-term, and that modify in the note, so it will be the conditions already marked in that. If you do a long-term, would be a situation like they will, all the payments you're missing and you cannot make it, they will be right in the end. And that would be the modification. If you have any more questions, I'd be happy to talk to individual because every single case is different, okay? The next step would be the short sale. But before we start the short sale, and Melissa will explain everything about the short sale, I would like to Eder tell us a little bit about everything before the short sale can happen. So what would be the situation when you start missing payments? So he will tell you exactly what is the next situation. Go ahead, Eder.
Thank you. Well, yeah, so I'm not sure if we're on the slide yet with the graph. There we go. Perfect. So before a short sale happens, homeowner is going to receive something called a notice of default. For everyone that's been paying their mortgage, to make a long story short, a notice of default is a notification that a bank sends to the homeowner when they haven't paid the mortgage, usually within 90 days of when it was due. Unfortunately, that happened a lot back in the crash of 2008. As you guys can see on the graph from 2006 to 2008, that's kind of when a similar situation to what's going on right now happened. By that, I mean people were being furloughed, hours were being cut, or they were just let go. Unfortunately, these homeowners couldn't do their mortgage. Now, in 2005 and prior, the notice of defaults were floating around 5,000. Up to a couple years ago, the notice of defaults were low, but as we're at that position where people are working the way they used to, or aren't working at all, then, you know, the income sometimes can get a little tight, which leads to a couple mortgage payments being skipped. Now, because we don't want anyone to get a notice of default, or, you know, unfortunately go to the foreclosure process after the notice of default, it's important to talk to your lender, like we've mentioned, because you want to keep your house, because obviously, you know, it's your roof over your head. If you get notice of default, then the foreclosure process begins. If at the end of the foreclosure process, the bank does take ownership of the house, and that's something you don't want, and because they don't want to keep that debt, they sell the houses for a really low price, and that's where the short sales come in. But like we keep mentioning, and the best way I can say it is the way Melissa said it last week, the best way to protect yourself is by being proactive. So we do suggest that always reach out to your lender or contact one of us.
Awesome.
Okay, Melissa. So now I recommend to you start explaining a little bit more about short sales. And
I have a lot to say.
because you don't have experience.
Yes.
You can
I should start going like this if you want me to shut up, okay? Because you can't put your hand on my mouth right now because we can't be near each other. But well, first off, I wanted to talk just to quickly say that I listened to this really I can't remember the name of it. It was a podcast that I listened to earlier that had a really great explanation of what happens when you don't pay your rent, or what happens when a mortgage payment is. It was really targeted at tenants when they don't pay their rent, what the consequences are. But I think we can just start from what happens when you don't pay your mortgage. So when you don't pay your mortgage payment, all right, it's really interesting, because let's just say, as an example, like, you could have your mortgage with Bank of America or Wells Fargo, or even we've got some property management clients, they have one with a bank called TIAA or United Wholesale Mortgage, or we have another one with New Res, which I've never even heard of before. So when you don't make that mortgage payment, all right, you're calling one of those places and you're saying, hey, if you're going to do forbearance, you're trying to strike a deal with one of those places. 9 times out of 10, when you're calling that place, they actually are not the note holder. When you got your mortgage, you signed loan documents. Okay, that was the note, and that's recorded. That's memorialized in a trust deed, which is a lien against the property. But the person that you pay that payment to, and sometimes for some people, they started paying to Wells Fargo and then they get a letter in the mail a year later that now it's been sold to somewhere else. The deal is that you're actually your relationship is with a servicing company. So it sounds like you have your mortgage with Bank of America, but you really don't. Bank of America 9 times out of 10 is just the servicer of your note. And I'll ask Alfonso to chime in if I'm incorrect about anything that I'm saying, please. So the servicer makes pennies on the dollar. It's almost like in property management, we make a percentage of the collected rent and we give the owner the rest. The servicer takes a percentage of the mortgage and gives the note holder the rest, okay? So the note holder that's where it gets really interesting, because the note holder could actually be anybody on this call or anybody listening, because the note holder is oftentimes it's a mutual fund, or it's an insurance company, because when you have a mutual fund, or if you have any 401k, those generally have some kind of moderate risk collections of a bunch of different investments, right? And so we are all and then those investments are buying mortgages. That's like a huge, ginormous business. So you actually might have a small ownership in the mortgage that you're not paying on the back end. So what happens is that if your mortgage, even if you don't pay it, and it's a government-backed program. So if it's guaranteed through Fannie Mae or Freddie Mac or Ginnie Mae, or if you have an FHA or a VA loan, or even one of those USDA or loans. Is that the HUD one, Alfonso? Is there a different one for HUD? So all of those are backed. So at the end of the day, the government will have to pay the note holder if they're not, the servicer still has to pay the note holder, but the government backs that back there. There's some government backing because that's what sustains our economy. So when we did short sales during the recession, so 2008 to 2012, I used to go out on the road and I'd say, wow, we're only at 14% unemployment right now, because that's kind of what it capped at nationally in the Great Recession. And I always would say, we don't have to worry, because the last time it was really, really high was in the Depression. So like 1929 to 1933, and the highest unemployment rate, I think, was around between 1929 and 1933, and it was at like 24.9%, okay? Well, forget that now, because now like 40% of the state of California is at home. We have like 6 million EDD unemployment applications, right? So our unemployment, I mean, it's hard to speculate right now what our unemployment is going to be when we all go back to work, right? So right now we're in this like paralysis, but in a month or so, hopefully less, but possibly, who knows, when we all go back to work, that's when we can really evaluate what the unemployment rate is. But so where am I going with this? So that's kind of what the process is for what happens when you don't pay your mortgage. But the thing is, so if you can't pay your mortgage, as was already mentioned, you're going to be very proactive about making an arrangement. What we talked about last week and what was mentioned again is that forbearance may seem, it's like a Band-Aid on a cancer. You can't put a Band-Aid on a cancer and think cancer is going to go away, right? So the minute, if you don't make your payment and then you don't make your next month's payments, yeah, that's great. Oh, relief. I don't have to make those 2 payments. But at the end of 6 months, if you haven't made another arrangement with your lender, and if they're not going to tack on those back payments at the very, very end of your loan, which is what I talked about last week. So if you had 25 years left on your mortgage, now you have 25 years too much. That's great. You can get back to normal. Maybe you're a little bit underemployed, but you have enough to make your mortgage payment, but you're not going to have enough to make those 2 missed payments, right? Those 2 skipped payments. So if you can't get your lender to buy into a suitable arrangement with you off of those back payments, then the options available are loan modification, but you have to be employed in order to have a loan modification, because a loan modification is basically going to your lender, Javier kind of alluded to this, and negotiating new loan terms. And then once those new loan terms are in place, then they'll send you documents, kind of like, and you'll have like a new note on your mortgage. So the other option is to do nothing. And if you do nothing over time, as Eder said, there will be a notice of default filed against your property. So traditionally, and we are not in a traditional time period right now, but traditionally, what would happen is you'd miss 3 payments, the notice of default would be recorded. It's recorded against your property. It's a lien on the property. And then the lender can foreclose as early as 3 months and 3 weeks after that. However, we are not in a traditional time. You can't, who knows if you can even record it? You have to get a court order, and there's no courts right now. So we don't really know. We're kind of like, we're adjusting every day based on a moving target, right? And so you can do nothing, and then ultimately the bank will take your property back. They will sell your property, and then they will, if they sell it for more and there's money left over, you will actually get that money back. But as Eder implied, a lot of times foreclosures, you know, we don't know what's going to happen. To me, also, there's always that unknown, and this is something I talked about a lot with clients during the recession, is this huge unknown when you're going to be foreclosed upon. You don't know when you're going to be kicked out of your home, because if the bank takes it over, then they're going to come. Is the sheriff going to come change the locks? Maybe someone bought it at auction. They want you gone right away. So there's definitely better and more dignified exit strategies where you can control your situation and your exit date. And in the recession, so I'm anticipating that this will happen, but I don't think we're there yet. Maybe next year or the year after. There were situations where we were able to do a short sale and get clients. I once had a client who got 40 $6,000 of cash from his lender at closing doing a short sale. So there's all sorts of incentives. Most of the incentives through the Home Affordable Foreclosure Alternatives Act was called HAFA. That's gone now. We're like 6,000 and less, 3 to 6,000. But were some special programs through some other lenders that really wanted those properties back, and they were trying to highly motivate their non-paying clients. So what is a short sale? I keep on using the term, but I haven't defined it. So basically a short sale, well, you can sell your home. No matter what, you can always sell your house. But if you happen to owe more on your home than the home is worth, so if your mortgage is for $550,000, but your home is only worth $525,000, you're going to be short $25,000. Well, obviously we're in a situation right now where you're not cash flowing. So you don't have that extra money to put to pay it off. Plus there's also additional fees associated with the closing. So what a short sale is a sale for the current market value where somebody negotiates on your behalf with your lender to have them forgive the difference. So if you owed $550 and your home was worth $525, and then you had all sorts of fees like the real estate commission, the closing costs, any notice of default fees, any fees on, let's just say it ends up being like $575,000. So the difference is like $50,000 between what the home is worth and what the costs are associated with the sale, including the loan value. So that $50,000, the lender would agree to forgive all of that and basically pay that on your behalf. So pay the real estate commission, pay the property taxes that are unpaid. They'll even pay the incentive to do the short sale. They'll pay all the closing costs. They sometimes in the last recession they didn't pay HOA fees, and they wouldn't pay for termite inspections and things like that. But overall, so a short sale would be a sale for less than the amount owed on the mortgage. So for the current value of the home, even if it's less than the amount owed on your mortgage, and a negotiation of the unpaid balance. So any questions about that, or anything I didn't clearly explain?
That was pretty clear.
Who is in charge for that transaction? Who is responsible for making the decision?
Okay, so what
In the short sale.
Well, you mean the bank? Are you asking me? I don't know where you're leading me, Javier.
The seller.
Well, yeah, the seller needs to contact like us or a local real estate agent, but definitely someone that has a ton of experience. This is not easy. Alfonso, we have a relationship with Alfonso previously. He knows we've done a ton of short sales in San Diego County. I think that just everywhere in San Diego County. We have a whole staff. I mean, they're a little smaller now, but I'm sure they're going to grow again as we face some new challenges, but who has tons of experience with that. And so you definitely want, but the seller would have to decide to list the property. And then the seller is going to have to be willing to be somewhat cooperative. So what do I mean by that? So the lender is going to ask for some proof, just like right now, if you're in these forbearance agreements, or if you're applying for unemployment or some of these economic disaster loans, they're asking for proof that you have been impacted by the disaster, right? So you're going to have to be able to show maybe that you made a lot of money in 2019, but 2020, so you're going to have to be able to prove that somehow through a letter, financial statements, bank statements, whatever the lender will require. And so the real estate company that helps you, we would package that up. We would also create an estimated settlement statement, which is what we've done in the past, which shows how much the lender, so if it's Bank of America, Wells Fargo, anyone that I mentioned, would actually net at closing. So then, because they need to look at that, and they need to talk about it with those investors, those Fannie Mae, those government-backed investors that own those notes, who's ever the decision maker there. And then and it takes a few months. It could take anywhere from 1 month to 6 months, depending on how many loans you have, how many different mortgagors we have to speak with. And then if you have some other kind of financial complications, like if you have property tax lien or any other sorts of judgments, things like that. Those are also things that need to get resolved in order to clear the transaction for closing. So first we'd have to put it on the market, find a buyer that's definitely willing to wait during this process. So they have to be highly motivated, and generally the key motivating factor here would be price. So we would generally kind of price it a little under market to motivate someone to want to wait while we kind of work through this process. Does that make sense?
Yes.
Yeah.
Yep. Yeah. So at the end of the day, if I'm in a situation like that, I have to make the decision of contacting a real estate agent as the current homeowner. Say, hey, I can't afford to make this mortgage payment. I tried to do no modification. I was denied or I was approved, but now it's going to readjust. So I need to get rid of this property. So I contact Javier and the team. They send a listing agreement with me. I have to cooperate on showing the homes and all that. But at the end of the day, I'm not the one making the decision whether we accept those terms. At the end of the day, is the actual servicer, Melissa?
Well, the seller makes the ultimate decision of whether they want to go forward, because on title, they're the owner of the home. But as far as the price point, if that's what you're specifically referring to,
That.
yeah, the seller, the bank is going to make the decision, or the servicer or the investor for the servicer is going to be making the decision with regard to whether it's approved or not. A lot of times when we send over that HUD and all that package, what they do is they send someone out to do evaluation, or they may do it over the computer. And they'll say, oh, your offer is $410. But we show our valuation at $430. So we want to see if you can get a little more, or we're not going to pay this bill or that bill because we want a little more. So we have to kind of work through those kinks once we get knee deep in the transaction.
Okay, cool. And once again, we're bringing this information to the consumer so they know, number one is call the servicers, get some forbearance information, try to, postpone your payment. You're not going to get forgiven that thing. Then after that forbearance is over, they can try to negotiate a loan modification. And after that, if they're still having some financial issues, which we sure hope it's not the case for most of the people out there, then they'll go into the short sale so they don't have to get a foreclosure or stuff like that on their record. And that's stuff that you guys can help with, right? Do you guys help with loan modifications, Melissa?
No, well, legally, no realtor should. I mean, we can provide you with support and guidance, but we can't do it for you, and we can't charge a fee for that service. So if you're listening to this call and somebody's telling you that they're going to charge you for that, no.
Walk away. They're being dishonest.
And just remember, this information we try to make it happen is because we learned in 2007-8 was no information at all. And a lot of people have all these situations. Right now, we don't say it's going to happen because we go day by day and see how the economy is going to play. But if it's the case, we wanted to everybody be ready with all the information they need to make a decision. And that's what we coming from with all this presentation is just information. And once again, if you have more questions, the place you can go and ask, which is ourselves. So, and so that's my opinion, and that's how I wanted to put in my little.
That's awesome.
That's his 2 cents. Can I add? I want to add something very positive on a positive note, though. May I ask? We do property management at our office. We have a pretty large property management division, and we only had everybody paid the rent, every single person. One person reached out, of those that paid the rent, one person reached out, and they were a group of roommates, and they were a little short, but the owner said that she would let them have a slightly reduced rent for 2 months. So we signed a new contract with them, just amending the rent for a 2-month period while they got on their feet and got their stimulus money and all of that. And then we had 2 other people that instead of doing it, they wanted to pay half on the 1st and half on the 15th. So while many of us are sheltering in place, we're all at home. I'm just so pleased that we got all that rent. That indicates that things aren't perhaps as bad as we perceive them to be. So this is kind of a gloom and doom phone call. I'm talking about distressed properties, which while I have a lot of experience there, I would certainly prefer not to be having this conversation, but you know, it is what it is. And I think the most important thing is to just have a dignified plan where you can hold your head high and move forward and not ignore what's going on with you and just address it face on to find the best solution. You know, if you wait till we've had a number of calls over the years and like literally like 3 days before the bank's going to foreclose on the property. So the auction date maybe is like Friday and it's Monday. Oh, can you help me do a short sale? Can you help me postpone the sale date? Well, you had 6 months and 3 weeks to call me and I could have done a great job for you, but now you're putting me up against this wall. And I mean, and sometimes we're able to do it 5, 7, we might have to spend 10 hours and, you know, call the attorney that's supposed to hold the foreclosure and see if they're willing to do it. And sometimes they won't. So it's definitely not effective. To get the best support, you need to be proactive. That's
anybody out there listening to this and to this presentation or watching it at a later date, I'm telling you guys from my personal experience, Javier and Melissa personally helped me. That's how we met in 2007. They helped me search on my place. My home, my condo, and you know, it was an amazing experience. But I tell you something that Melissa's not saying. She herself has handled thousands of cases. So if you guys need anybody with experience, right? It's Melissa. It's Broadpoint Properties. They know it ins and outs. It's like whenever and you have a serious illness, are you gonna go like to the pharmacist to give you something, or are you gonna find the best doctor? I'm telling you guys that the best modification doctor, this is your new name, Melissa, the modification doctor, that is Melissa and Broadpoint. She's seen thousands of cases, guys. Listen, you may not be there, but if it looks like you may go down that road, please give her a call, because like she said, it all takes time. So she can do a great, amazing job for you if you guys give her time. Sometimes when you wait till the last minute, which is most of us, right? Our options are down. We had options, but they're down the drain because we waited till the last minute. So we hope that nobody out there that's listening has to be in that situation. But if you are, we want to give you the information ahead of time. Let's be realistic. If you can pay the mortgage, there is a forbearance assistance in place right now. So you may not be in that default until 3 to 6 to 12 months out. But if it comes down to it, give us a ring, like Javier says. We're here to help you out. We're here to give you the resources that we have to get you the information so everybody out there can make the most educated decision for them and their families, right?
And the last step would be the deed-in-lieu, which Melissa was going to explain.
Yeah, I was going to explain that, but I did remember one thing that when I did all my short sale presentations, like 2007 to 12, I was like invited to go on the road and talk about short sales and everything. And I used to sum it up, and Alfonso, I completely forgot about it until you just said is, does anyone remember the commercials for King Stallman bail bonds?
Yep.
Yeah.
Do you remember what he used to say?
There you have it.
Oh, it's better to know me
and not need me,
and not need me, than to need me and not know me. Yeah. Right. So that's what you were saying. Exactly. So, okay. So there is, so another option, but I've actually, of all the cases that I've done, I think we've done around 1,500 to 2,000 cases of short sale. I think we only had 2 or 3 people that did deed in lieu of foreclosure. So you might hear about deed in lieu of foreclosure, and so what people perceive it as is like, oh, I'm just gonna move out and leave my keys on the kitchen table and I'm out of here, and I'm not gonna have anything to do with the property. Okay, that's really bad. You do not want to do that. If somebody's telling you to do that, just like you can't walk away, because you can't walk away from the legal liability for the house. So for example, let's just say that you said, I am done, and you dumped the keys on the kitchen table and you went to live in your mother-in-law's granny flat. I don't know. Okay, you still own the home where you left the keys, all right? And let's just say your house has a swimming pool. And let's just say 2 little kids from down the street got this great idea that they were going to go swimming in your house, or they were going to go skateboarding in your empty pool, or what it is, and then one of them gets hurt, or God forbid, knock on wood, some little small child drowns in your pool or something like that. That is still your house, okay? You still own it, so you will still have the legal liability. So if you're going to do a deed in lieu of foreclosure, that still needs to be arranged with a bank, and it often takes just as long as a short sale, and the consequences are different on your credit report and not as favorable as in a short sale. And what that is that instead of official foreclosure, you will deed the property back to the bank and they will become the owner, but you will still have legal responsibility for the home until it's not in your name anymore. So if you've got this fanciful idea about how you're going to just leave the keys in the kitchen and move on, do not do that, okay? If you have a partner or a significant other that is telling you to do it and you're listening to this call, you can have that person call me and I will just go through the whole, it could cause you so much headache if something bad happens at your property afterwards that you would regret not making like those arrangements. So that's what deed in lieu of foreclosure is. In the event that you are in your home and the bank has foreclosed on it, there is also something called cash for keys, which, sometimes you can negotiate with the bank if they want you to move out and leave the house without in the best condition possible, that they may say that they'll give you a little bit of money if you just maybe in a week move out, and they'll bring you cash when you give them the keys. So that's something that you might hear that term if you find yourself in that situation. You could actually cash for keys also, because we've got a lot of eviction moratorium in California right now, or we have one big one. Cash for keys, if you are a property owner and maybe your tenant's not paying the rent because they can't, and you want them gone and the courts are closed, you might be able to, and you should call me about that as well, but you might be able to negotiate with your tenant for them, giving them a little bit of money to move on so that you can maybe fix up the house, or just find a tenant who's an essential employee who has income coming in. So that's just like a pro tip on the property management side.
So
Awesome.
So with that, we almost finished our presentation. Just wanted to recap the steps we're talking about. The first step was you need to talk to your lender first. The second one was the forbearance. The third one was the modification of terms. The fourth one was the short sale with information with the notice of default, and the deed in lieu and the foreclose and the cash for keys. So that to give you all the steps is going to happen. And if you have any questions, free to call us.
Jesse, can you go to the last slide, Jesse? Put the last slide for the contact. There we go. Go ahead, Javier.
Perfect. And next week, we will have another presentation, another forum, so we can talk more. And Jesse is going to say which one it is.
One thing I wanted to say before that was of the notice of default. So for buyers, people that are shopping right now online, I know that we all love to shop online, especially now that we're locked up inside our houses. You go on Zillow, Redfin, and all of these, and you'll see what's called a pre-foreclosure property. Now, that doesn't mean that it's actually on the market. It means that there is this notice of default, this NOD recorded at the county, showing that they haven't made their payments for a minimum of the 3 months right now. So again, just so that you're understanding, that property that you see on Zillow, Redfin, all these others that say pre-foreclosure doesn't necessarily mean that property is for sale. Now we have apps that have more up-to-date information that are directly from the MLS that we use, and those have the up-to-date properties that are for sale, even if they are short sales or they're REOs that are already bank owned. So just something for you as consumers to understand is that the majority of these properties that go and have a notice of default, they're cleared up before it gets to the stage of foreclosure. Right now, negotiations are done, maybe a modification is finalized, and so that property never goes on the market. So if you have questions about that, feel free to reach out to us. We can definitely explain to you whether any of these properties are actually on the market or what the situation might be. So next week, we're going to be having a presentation. We're going to have a house tour, actually. So we're going to do a few house tours, open houses, so you can look at some properties up here in North County and potentially Riverside County. So, and then the following week, Monday, what is it? The
27th?
27th. We're going to have a rent versus purchase or owning. So we're going to have more information of what are the pros and cons of owning your property, what your responsibilities will be, and why it's a lot better to just own your property straight out.
Correct.
Yeah. Alfonso, thank you very much for joining us.
Absolutely. And, you know, I want to close with a positive note. I know we've given you guys a lot of information, and some of it comes with a negative outcome, right? Which is short selling or losing your house, stuff like that. But no, like, just, I kind of want to recap what we heard today. What I heard, what I'm taking away is, like, Melissa at Broadpoint Properties, she manages a lot of homes, not a little bit, a lot of homes. And there's only a few people that called in, maybe potentially having some struggles with paying their rent, and they got fixed. We got the forbearance, right? The deferment of payments right now going on. Send some checks to some families that make under X amount of income and they file their 2019 tax returns. They're gonna give them some money so they can pay the bills and put food on their table. A lot of companies are sending their employees to work from home. So people are still working. So, I mean, it's not as bad as it was in 2008. I guess we haven't seen that happen yet. But what I'm telling you, there's a lot of opportunity. So I want to close with this. If you feel financially stable with work and income, stop paying rent. Listen, come back next week. Follow us, like Jesse just said. We're going to have some home tours. We're going to give you guys some options of North County, what the prices are going, homes are going for, what the price points are. And then in Monday the 27th, we're going to come back and do an analysis on renting versus owning, right? So although there's a lot of negativity out there, we want to be one of those people bringing you guys negative information. So it's still a great time to buy as long as you can afford it and you're financially stable, meaning that you have a job, okay? There's a lot of programs out there, especially with the state of California, where you're not limited to the area where you buy, and they're still financing 100% of the purchase price. And the rates are in the low threes. Okay, so we're gonna keep coming back every Monday. Jesse, thank you for having me. And we're gonna give you guys some more information. So please put it on the calendar, share this link if you're seeing it at a later time with somebody that you know will benefit from this information. And join us next Monday from 2 to 3. We'll be back with more information for you guys.
Stay tuned.
Yeah, thank you very much for watching, and stay safe and stay healthy.
All right.
Bye-bye, guys.
Bye, everybody.
Bye.
Hey, we finished up early this time.
Thank you, Melissa. Oh, yeah, she.
I'm out. Ah, ya nomás somos nosotros.
Nomás no somos nosotros.
Nah.
No, estuvo bien.
Tengo ese saco igual que tú, es como grisecito oscuro, ¿no?
Hey, we're still live on Facebook.
Oh.
Yeah.
What's going on Facebook?
Is this so? No, we should have. Oh, okay. Bye bye, Facebook.
Saca la guitarra, Jesse.
Saca la guitarra. All right, man. Luego hablamos. It's still recording.
Bye.